What is going on, investors? Hopefully you guys have a great day out there. Time to talk about Alphabet Incorporated, better known as Google. They've got two different ticker symbols, GOOG and GOOGL. In my opinion, doesn't matter too much which one you decide to buy because take a look over the last year, stock's up 80%. Year to date, this thing's been ripping up 31% just in a few months. And spoiler alert, the earnings are absolutely fantastic. And this swing has gapped up again. Okay, we've gapped up again with Google. It is just creating kind of this staircase formation, which I'll be honest with you, I have not seen in the stock market in a little while. This stock has just been on fire. Their EPS beat by, just $10.62. And they beat on revenue by about $3.6 billion. We're not going to waste any time. Google's a very simple company, in my opinion, to understand. If you're new to the stock market, you're new to reading financial statements, company like Google is a great one to start with because they have a very simple business model. They have this Google search and other. We see here, this is for quarter ended in March 31st. We've got 2021 here and 2020. We're going to go over these financials. We'll talk about them. We'll talk about the buyback they just announced. We'll talk about all this stuff, and then we'll get over to the stock chart to see if there's any spot where you can catch this absolute runaway train. So we've got Google search here, went from 24.5 billion up to 31, I'll call that $31.9 billion. Impressive growth. That is a very mature business. Search has got to be over 20 years old at this point. Google dominating that space. I probably didn't need to tell you that. Now here's even more impressive. YouTube ads went from 4 billion in the previous year. That's 50% growth, guys. Okay, to $6 billion. 50% growth in YouTube ads. Then you've got Google Network here. This is like the networks of sites like AdSense and things like that. 5.2 billion up to 6.8. That is $1.4 billion. Actually more, $1.6 billion worth of growth. That gives you Google advertising in just the last year went from 33.7 billion up basically $11 billion to $44.7 billion in revenue. Just incredible. So they've got some other revenue here as well. Oh, wouldn't you like to have other revenue go from 4.4 billion up to 6.5 billion? Now, they've got some other stuff going on. They've got this Google Cloud. Take a look at Google Cloud. Google Cloud almost doubled in the last year. We went from 2.7 to $4 billion and some change. They've got some other bets here. We've got total revenues for the last year went from 41 billion up to $55 billion. Hello, that is absolutely phenomenal growth. Because we talk about this company and all the FANG names on a regular basis on this channel, people ask me, why don't you cover penny stocks? Why don't you cover these micro cap stocks? Hello, just look at these numbers right here. This is why we ignore almost all the other stocks in the stock market, because Google is growing certain segments of their business by 50%, some 60, 70, 80%, and even their, we'll call that legacy business of search grew over $7 billion in the last year. Guys, it really doesn't get any better than this. Now, could get even better is the board of directors authorized the company to purchase $50 billion worth of its Class C capital stock. That happened on April 23rd. So you got another $50 billion buyback coming from Google. Let's take a look at the balance sheet. Take a look at that $50 billion. Is this going to impact this company? We'll take a look at that. Now, we've got as of December 31st, 2020, and then we've got March. So this is basically kind of 3-month, almost 4 months view here for Google. Now, we've got cash and cash equivalents basically flat. We've got these marketable securities down a little bit. We've got total cash going from 136 down to 135. So the first question you should ask yourself as an investor is, look, they just had an absolute blowout quarter where they beat by $10 and they had just incredible revenue growth. I'm sure they flowed a ton of money to the bottom line. We'll see that when we look at the statement of operations. Well, how come cash basically went down? So that's what you should ask yourself. You'll solve that question when we get over to cash flow. So that's just a little nugget that you want to put in your head. Very asset light business. Okay. They don't have inventory and things like that. Take a look at this. Total current assets is 172. 135 of that is cash. I mean, this is why I love these tech stocks. Okay. You have 170 billion in assets and 135 of it is cash. It's just absolute. And then look, the other bits of it is accounts receivable. So it's almost all cash. It's just unbelievable in my opinion. Now, they've got some other stuff going on here that gives us total assets of $327 billion. Here's total liabilities. All the liabilities at Google add up to $97 billion. They have $108 billion just in marketable securities, let alone another little $26 billion just sitting there in cash. Guys, I mean, this is just phenomenal. Google could afford not only a buyback, but could be aggressive on the acquisition front if it wasn't for Washington and Europe and all these regulators out there that are putting their hands in this cookie jar. Google could have rolled up a bunch of businesses. That's what I think they would do if it wasn't for Washington, if it wasn't for the EU and these countries that are just going after this company from a regulatory perspective. This is a company that could be even more dominant than it is. It's basically hamstrung by the fact that you have regulators out there. And for better or for worse, I'm not saying that's necessarily a bad thing. I'm just saying that is the reality for Google. Now, moving on to the statements of income, we talked about this absolutely blowout quarter. So we pull down these revenues here. Here's our most recent quarter on the right-hand side. So we had that $55.3 billion worth of revenue. We had to pay $24 billion basically to acquire that cost. You have research and development at $7.5 billion, up fractionally from the previous period. You've got sales and marketing basically flat. So you like to see that. And general administrative is actually down. So total costs and expenses went from 33 up to about, we'll call that 39. Okay. So we grew the top line. We'll call that $14 billion and change, but we only grew our expenses by about $5 billion and some change. That is absolutely phenomenal. So you can imagine our income from operations right here went from about $8 billion up to $16.5 billion. Then they have this other income. My guess is they probably sold a business or they had something really go right. This other income is just absolutely phenomenal. So it's going to give you this income before taxes at $21 billion. I think what you could do if you wanted to kind of normalize out these earnings is you could back this $4 billion out and give them credit more closer to this $16 billion, because this income from operation number is what will continue to reoccur for Google. AdWords, AdSense, YouTube, things like that. Google Cloud is what's going to keep reoccurring. This $4 billion, $5 billion almost is probably not going to reoccur. That gives you this fantastic net income number of just, we'll call that $18 billion. In the previous year, it was $6.9 billion. That just gives you this earnings per share at $26 per share. It's just unbelievable. When you look at these numbers, they almost don't look real, but they really are. It's just incredible. So we've got number of shares used in the calculation. You went from 692 last year down to 682. So they're executing this buyback and you see evidence of it there. Spoiler alert, maybe that's where the cash went. So we pull down this fantastic net income number. So yeah, they had this gain loss on equity securities. So it looks like they had a gigantic gain by selling some equity securities and maybe some kind of business that they owned. That gives us net cash provided by operating activities still without any of that factored in. $19.3 billion of cash flows. In the previous period, you had $11 billion. In terms of investing activities, everything looks very clean here. Okay, you had some purchase of these marketable securities. All things being considered, everything's basically flat there. Now you got these financing activities. This is where you're going to find where the money flowed to. Where'd the money go? They had a fantastic quarter, $19 billion of free cash flow. Where did it go? We'll take a look here. Repurchase of capital stock. Boom, $11.4 billion. Okay, they had some stock-based awards here. They basically refinanced some debt or basically just issued $900 in debt and then repaid about $937 of them. All things being considered in terms of financing activities, they shed through about $13.6 billion. And then you had about $5 billion or $5 billion in change in investing activities. That gets you up close to this $19 billion. So it's basically flat from a cash perspective in the quarter. Just a phenomenal quarter. And take a look, take a breath, because when we get over this stock chart, it might take your breath away again, because this thing is just staircasing up. I put this line up here. This is where the stock is trading in the after hours. Here's where we were today. As you can see, if I spread this chart out with Google, it's just been staircasing up. Okay, this is not a formation that happens with a lot of mega cap companies. Could it happen with smaller cap companies? Sure. I don't see this very often with mega cap companies, where you consolidate sideways for a few weeks and then you gap up, you consolidate sideways, gap up, consolidate sideways, and gap up again. So look, I would say with Google, if you can get it in a sideways consolidation somewhere up here, again, if history repeats itself and it sideways consolidates up here from 2380 up to, we'll call it 2440, and it consolidates sideways up here and it gaps up again, well, guess what? Any pullback to the previous consolidation zone, in this case, 2240 up to about 2300 and change, in my opinion, look, we just went over the financials. It doesn't get any better than this. So any pullback into a consolidation zone would be a buying opportunity, in my opinion. Okay, this is just a fantastically run companies. Honestly, there's just not much more we can say with this. This is just, these stocks should be a cornerstone of your portfolio. And before you go buy the next hot solar stock or the next penny stock, come here. Before you do that, come and look at these financials and say, is that opportunity, that risk, better than the guarantees that you're seeing here with a company the size of Google? And on top of that, they have all this cash that they really can't do anything with except buy back the stock. Okay, we talked about that Google's not going to be able to do acquisitions. They're not going to be able to roll up search engines. They're not going to be able to do anything in like the video space. Regulators are not going to allow them to do that. Not Democrats, not Republicans, not Americans, not Europeans. None of them are going to allow them to do that. Okay, they're not going to be able to roll up this cloud business. They're not going to be able to go, buy other cloud performers out there. It's just not going to happen. So what are they going to do with this massive amount of cash? Well, they're probably just going to continue to buy back stock, and that is likely going to propel this stock higher and higher. Again, any pullback to the previous consolidation zone, my opinion, could potentially be a nice buying opportunity. That was Google, and that was phenomenal. We'll see how the stock reacts in the coming days and weeks ahead, but this one should certainly be on a shopping list if it is not already. Hopefully you guys enjoyed this video. We'll be back again soon with lots more. Good luck with your investments.